Hey guys, are you confused or even discouraged about purchasing your very first home? You feel like you're never going to get there. You feel like you're never going to own your own home. And have you heard like buzzwords like DTI or PIM? I said it again, Grant, PMI. Always flip those around.
So you
Or
even more confused. It's okay.
yeah, or even CD. It really drives, as you can tell, it drives me crazy to get them right, right? But stick with us and listen up to this podcast. We're going to give you exactly what you need to know to purchase your first home. And we make you a promise. We're not going to make any fluff. We're going to give you what you need to hear so that you can make plans to be a homeowner. So I'm excited to get started. And I'm Kristie Dimarakis. I'm with LPT Realty. I've been a realtor in the Tampa Bay area for over 10 years. And my friend here is Grant Goad, and he has been in the business a year less, 9 years. So
That's
we're
right.
trying to run parallel here as long as we've been in the business. But I'm
Yeah.
excited to have you on. I
Yes,
really
thank you.
feel like first time home buyers right now, especially in the Tampa Bay area, prices are high and interest
Yes, they
rates
are.
are not where we want them to be. Not
No.
terrible,
Yeah.
we're not quite where we want them to be. So I know it can be a little discouraging if you really want to purchase your first home. So our roadmap, if you will, today we're going to talk about the pre-approval and we're going to talk about picking a loan. And if we have time today, we're going to talk about budget. But I bet we're going to have enough to talk about with just
Oh, yeah. All the
approval and
goodies.
picking the loan, right? So let's start with the pre-approval. Well, you got to hire a realtor first. So before you start doing anything,
That's right.
find your realtor. That can be a whole different podcast on how to pick your realtor. But let's just say you've hired your favorite realtor and now it's time to put the lender in place. So, Grant, let's talk about what is the difference between pre-approval and that other word, pre-qualified.
Pre-qualify. Yeah. So you'll hear two main things when you're out, Googling mortgage and how to buy a house and that kind of thing. You'll see the words pre-qualification or pre-approval. And they're two different things and they sound like they have the same thing, but in our world, in the real estate world, they have very different meanings, right? Pre-qualify is simply you typing in information and spitting out a letter that says, yes, if all these things are true, you could get qualified for a mortgage potentially. But a pre-qualification doesn't really hold much weight, essentially, is because whatever whatever thing you're typing that information is not looking at your credit, is not looking at your income, does not know really who you are. They're just relying on that specific information that was typed into that specific system and spit out a letter that said, yeah, you're pre-qualified. You could do this. So pre-approval is a little bit more meaty, if you will. So it's looking at a full application. Me as the lender is going to look at your application. We're going to look at your credit. We're going to look at your income documentations. We're going to look at your budget, make sure it works within your budget. We're going to look at your stability of income, all those factors that we need to get you to the finish line. We're going to review up front and then issue what's called a pre-approval letter. Now that's the letter that most people in the industry are looking for when you go to submit an offer, right, Kristie? Whenever you're going shopping, when you're showing homes, that's the kind of letter, right, that you're looking for from a buyer. That's
Yeah.
right.
Yeah, and
Yeah.
even if a seller's listening to this conversation right now, whether whatever side you're on, a buyer or a seller, it's not in your best interest just to have that pre-qual letter because
Right.
you may fall in love with a $500,000 home and 425 is your max. And then if you're a seller and you're looking at your offers and there's one buyer who's gotten their pre-approval and then the other buyer and you're trying to decide only has a pre-qual letter, me as a seller, I'm like, I don't even know if this person can truly, truly afford my house.
Right.
So it works both ways to have that set up properly.
Yeah, and speaking of no fluff, like I love the letters. You'll see a different variety of what these letters actually look like from lender to lender. Fairway recently, which I really appreciate this change that they made, they have provided a letter that truly says exactly what a pre-approval letter should say. Your loan officer has reviewed credit. Your loan officer has reviewed income, has seen pay stubs, has seen W-2s, has reviewed tax returns, has looked at bank statements. It says all that in plain writing so that it puts a little bit more confidence in the seller in that situation and the listing agents. Um, so really, a true pre-approval letter should have meaning. It should. When we're working together, we're going to make sure we have all that good information up front. It is a little bit more work. I'll be honest. It can scare some people at first when you're hearing a lender like me ask you for your pay stubs or asking you for your W-2s or I want to see your tax returns. But trust me when I say, we don't ask for things just because we don't trust you. It's because we are required to fulfill guidelines in the lending world. So, um, in order to do that, most sellers, most listing agents, most agents know all that to begin with. So they're going to want to know that you have been through the process. We've combed through everything to know that, okay, this person truly can purchase this home with a mortgage. So it's really important. It's sometimes painful, but very important.
Yeah, yeah. So let's just say in a perfect world, the documents that you ask your buyer to provide you, they provide it to you in a timely fashion. What's the expectation in terms of a turnaround to get that pre-approval? Is it
Yeah.
6 hours, 24 hours, 48 hours?
Yeah, if you're filling out an application, like generally I like to do an upfront interview phone call, right, before we start really anything. So once we talk on the phone, we kind of go over the process. Essentially, I need an application from you. So I might take the application over the phone, or if you prefer to do it on our mobile app or online, you're welcome to do that as well. And once I have that, generally the turnaround time is the same day if I have all your documents with it. If I don't see any documentation, and I don't get it till, that evening or somewhere, the next day for sure should be the quick turnaround time. There are special instances where maybe a self-employed customer, they're struggling to find their tax returns. Self-employed folks, we generally have to have those tax returns to make any type of pre-approval decision. There's some loans where if you are not self-employed, where I can digitally verify your information, so I don't necessarily need you to track down a pay stub or a W-2 and will still issue a pre-approval letter because I have been able to digitally verify it online through services that we offer. But if it's a self-employed customer and I don't have tax returns, that would be one of the main situations where we might need to wait a couple days for those returns. I can still give you a good idea if you tell me your income, but we really need to see tax returns. So all in all, same day turnaround time if you have all of your documents. If I don't get your documents for, a day or so, then it's going to take a day. So
Yeah.
really, as fast as I need to move, I will move. So
So what you're saying is if you're a buyer out there and you want to start shopping on Saturday, it'd be a great idea to get you the docs this afternoon or first thing in the morning, is what you're
absolutely,
saying.
yes, I
Okay.
absolutely. Most shopping is done. I would agree on weekends, so absolutely get it to me tomorrow morning, if you want to get an application going, and then that way by Saturday morning you're ready to roll. We'll at least have some information for you by then. And also weekends, I'm available as well. So
Yeah.
we in the lending world, same in the real estate world, lots of things happen on the weekends. So trust me when I say it's totally fine to start the process then, even if you haven't started it on Friday. It's okay.
Yeah, and with that said, I know a lot of buyers want to go to their hometown bank or maybe to one of the bigger banks because they're like, my money's already there. They already know in my investments, all the things. However, something to think about when you use the bigger banks is they have banker hours, nine
Typically,
to
yeah.
five typically. So if something comes up when you're home shopping on the weekends, it does make it difficult to reach that person over the weekend. So
Definitely.
that's something to consider when you're lender shopping to like, we're probably going to spend weekends looking for houses.
Yeah,
Might not
definitely,
be such a great idea.
definitely.
Um,
And if you're not
okay.
actually out, if you're not actually showing them, most people are still scrolling on Zillow or, Realtor.com on the weekends, and they're
Mm,
like, "Oh, I wonder if I could actually afford this." Well, there's someone who could tell you if you could actually afford it. So
yeah, that's
it's very important to
important.
be available, on those weekend days for sure.
Yeah. So once you get that pre-approval, how long is it good for?
So pre-approval is good for, I say as long as the credit report is good for, technically your pre-approval is good for. It's going to say 90 days on the actual, piece of paper. However, a soft credit pull or a hard credit pull, which we can discuss here in a few minutes, they're good for 4 months. So as long as nothing has changed, your job has not changed, your type of employment hasn't changed, nothing has changed essentially, we're good to reissue that pre-approval letter within those 4 months. We're not going to have to recheck your credit. Um, but the rule of thumb is, if it's been a few months since I've heard from you, I'm always going to ask you, hey, so and so, have you changed anything in your employment or your job, or did you move away, or things of that nature. I'm going to check on, even if I've got an up-to-date credit report. I still am going to check on those things. So as long as nothing's changed and haven't made any big purchases or anything like that, it's going to be good for about 4 months.
Okay. Yeah.
Yep.
So I did a video for TikTok a few weeks ago, maybe it was last week, whenever. And I talked about like don't keep secrets from your realtor or your lender.
That's right.
He just touched on that.
Yeah.
Um, don't keep secrets. Like if you lose your job, say it. If you
Say
get
it.
a pay increase, tell us.
Say
If you get a pay
it.
decrease, tell us. If you
Yep.
get divorced, if you get married, tell us.
Yes.
Because those are not secrets that you can keep.
That's right.
I say we will find out.
We will know.
You will
Yes.
find out. So there's no point in trying to hide, oh, well, I've got another job lined up. Mm,
Yep.
doesn't work that way because
Nope.
you're going to do your due diligence to make sure that Bob is has a job. And
Yep.
if he worked at XYZ and went to ABC, you're going to have to verify his employment, and you're going to find out.
Yeah,
So,
we're gonna find out eventually. So, and I'm so glad you touched on that because the main rule of thumb here is consistency, right? In all things, mortgage guidelines love consistency. That does not mean, though, if there is a change, it's a deal killer, right? That's not what
right.
that means. It just means we need to know about it, just like Kristie says. So we have to know that something is happening in order to qualify you in the most proper way, in the one that's going to pass through underwriting, right? So if you do change jobs, it's not the end of the world. We just need to A, document it and make sure B, that you still fit within the qualifications. So
Yeah.
definitely important. Don't keep any secrets from us because whether we find out today or 2 weeks into your contract, we're going to find out eventually for sure.
Yeah, we're not going to touch on this today, but I want to, because we're talking about don't keep secrets. Um, you're here to be like an advocate.
Absolutely.
You're, if I was the buyer, you're my person, you know.
Yeah,
So I don't want to keep those secrets because you're not the one that's saying accept or deny the loan.
correct.
You're, for lack of a better word, you're the messenger.
Yeah, I'm
So
I'm the middleman. That's how I like to say it. I'm not the scary person with the
yeah,
judgment gavel, right? That's not who I am. My main goal is to get you closed, and
yeah.
that's my main goal. So that's what I'm going to try to do it. But there are proper ways we have to get that done. So
So don't be
definitely,
afraid to ask random
absolutely, yeah,
questions like, should
yes,
I pay off my credit card? If I'm going to
yep,
get married, should I put it on my credit or should I pay cash for the wedding venue? Like all the things, like don't be afraid to talk to your lender about things that may come up. He's
correct.
not, as I like to say, the appraisers, the underwriters are like the Wizard of Oz, standing behind the curtain and you never
That's
see
right.
those people, right? And
Yeah,
you're not that person.
no, no,
So,
definitely not.
like I said, we're not going to touch on it, but I did just want to make sure everybody was really aware that have the discussions with you, be honest,
Absolutely,
frank with you, also with me as your realtor, but more
yes.
importantly, um,
Yeah.
with you.
Yeah,
So,
communication, yeah, communication throughout all parties, throughout all parts of the transaction is always the best route, right? Is over
yes.
communicate. Even if you don't think I need to know, you're not going to annoy me or bother me by telling me. I'm just going to be like, oh, that's great. Cool. All right. Moving on. You know what I mean? So it is one of those things where, definitely don't worry about over communicating things when we're in this process, like the early stages of a transaction, for sure.
Yeah, absolutely. So that leads us to picking a loan.
That's
So
right.
there again, we could go down that rabbit hole for a couple
We could.
hours to talk really heavily on the
Yep.
different types of loans. But I just want to touch on, I guess, maybe like the two popular ones,
Sure.
conventional and FHA. But
Yep.
we can tell our listeners about all of the products. But I guess if we could just focus on those
Sure.
two big ones.
Yeah, so we'll start with conventional and FHA, right? These are uh, definitely the most two common ones, especially in today's market. And basically, the main difference is who is insuring the loan that we're issuing, right? So you've probably heard of Fannie Mae, Freddie Mac, and Ginnie Mae. These are, not names of our neighbors. They are names of government organizations that insure the loans that we are giving out, okay, that make sure that we as the lender get paid if you don't ever pay these loans back. So that's the short summary of why they're different, different types of loans out there. So conventional is the most popular. The main difference between conventional and FHA are number one, the minimum down payment, and two, minimum credit score required. Um, Typically, with conventional loans, first-time home buyers can go down as low as 3%. If you're a non-first-time home buyer, it's 5%. With FHA, the minimum down is 3.5%, but FHA allows a little bit lower credit score. Rule of thumb is 580 for FHA, but we can go as low as 500 if we have some special circumstances or mitigating factors that improve your file. We can go lower on that credit score, but generally think 580, and then conventional is always 620 is the bottom score for conventional loan. So that's the main takeaway. The other main takeaway, and I think this is very important to make sure everyone understands, and you touched on it earlier by mixing up the letters, is PMI, private mortgage insurance. Again, it goes back to us as a lender. How are we going to ensure that this money will get repaid in some form? So we require mortgage insurance to be held on FHA loans for the life of the loan. Um, Now it's generally about a 0.5% total on a monthly payment. So, it's not drastic, but it is significant. Like it is something to consider in your budget, which we would go over. So you want to be sure that that fits within, your monthly payment budget because that's going to factor in along with, the actual mortgage, taxes and insurance and all those goodies. Um, Conventional has the option if you were to put 20% down, it's not required. There are programs where we can actually waive it, but there's fees involved. So that's something that you and I would talk about as a buyer to see what makes sense for you. But in the general sense, on conventional loans, once you reach a certain threshold of loan to value, meaning how much loan do you have versus how much this house is worth, that mortgage insurance will fall off once it reaches around that 80% mark or 20% down, if you will. So that's kind of the main things. Again, we could go into vast, deep holes on this,
Yes.
but that is an
Yeah.
easy conversation to have once we are, working together and we look at the programs, we see your credit score, we know how much money you have saved up. It's really not complicated once we get to that point because it's pretty clear which programs we can go into.
Yeah.
Yeah.
We're not talking about VA, which is zero down,
Yeah.
or
Right.
USDA.
Yeah.
There again, just for a time saver.
Yeah.
So first time home buyer
Hmm.
just called you and said, okay, I want to buy a home in next year. Tell me a little bit about how much money I'm going to need. So you mentioned either 3.5% or
Hmm.
5%.
Hmm.
So we know we need the down payment piece.
Yep.
What other amount of money would a first-time home buyer need to make sure that they have in their piggy bank saved up before really pulling the trigger to be able to purchase a home? Now we
Yeah,
could
that's a
go down the other
yeah,
rabbit hole of a seller could pay for closing
right.
costs and all those things, which we're not going to do. But let's just say in a perfect world
Mhm.
that you, as a first-time home buyer, that you've put a money aside. So other than down payment, what other amounts am I going to need?
Yeah, that's a great point. So, your minimum down for a first-time home buyer on a perfect world conventional loan, you've got good credit. We can do 3% down, 3% even, or 5% depending on the program. So on top of that, you have what's called closing costs, which is a lot of times overlooked. This is in addition to your down payment. Now, these closing costs come from a variety of sources. It comes from us as a lender. We have fees. Number two, it comes from the title company. Who's ever closing your transaction will have their certain fees that they must charge in order to record this transaction as official, to record it with the county, to make sure that you are listed properly as the owner of the property. You have all those fees. And then you have third party fees, which come from a few different sources. The main ones are your taxes, your insurance, any HOA fees, and mortgage insurance that we talked about before.
Mhm.
So all those clumped together are what we call closing costs. And so when we're going through the process, what's going to happen is once we decide on a loan program, you're going to receive a very, very detailed loan estimate from me that breaks down every one of these line items. When it's early on in the process, they're going to be estimates. I try to inflate them so that way you're prepared for when you actually go under contract. But it gives you a good idea of what we're looking at as far as closing costs are concerned. Now, rule of thumb, typical average, think about 2% in addition to your down payment in closing costs. That is a rough number. It's going to change based on every property that's out there, property type, where the property is located, what state it's located in. So just think though, your minimum down payment plus about 2% should cover pretty much all closing costs and be a safe number.
So would they have to have any money in reserve? So so the bank feels comfortable knowing that they have 6 months of reserves kind of sitting there, or is that not important?
There's some program where that's important for our first-time home buyers. Typically, no, it is not important to have reserves showing. Reserves are needed sometimes when credit is extremely low. Reserves might be required depending on if, let's say, you're in that FHA program that I mentioned that goes down to 500. Typically, they want a couple months of reserves, sometimes 3 months of reserves to show that you've got some options. If you're buying investment properties, like if we're not talking first-time home buyer, we're talking, you're an investor, we're going to need reserves, right? That's when reserves come into more play. But for most first-time homebuyer programs, the reason they're first-time homebuyer programs is because they have some of these more lenient guidelines, like not needing reserves. So, as far as approval, we don't need reserves. But I, as just a human talking about budgeting, you obviously don't want to completely use every penny you have on down payment and closing costs,
Yeah.
right? Because there will be some other expenses that I'm sure you can touch on that might pop up when it comes to home ownership. So you
Yeah,
do want to
'cause
have something. Yeah,
you've got to move, the cost of moving, whether you hire somebody to move you or you do a U-Haul, it doesn't matter. There's other expenses. So yes, absolutely, you need to make sure that you do have some money in reserve,
right.
because you don't want to deplete everything.
That's correct. Yeah.
I know coming from me, I want you to be excited about home ownership.
Yes. Yes.
I don't want you to lay in your bed the first night and go, oh my gosh, what did we just
What
do?
did we
Right?
do? Yeah. Yeah. So that's something that, I may not, as your lender, I may not ask you about personally, like, okay, well, how much do you have saved up? But that is something we can talk about, right? I don't need it for necessarily the mortgage approval part, but just as human to human, right? We want to make sure that we're setting you up for success and making sure this is a good thing for you as opposed to a burden. We don't want it to be a
Yeah.
burden. Homeownership should not be that. So
Right. Well, we want also for our viewers to gain generational wealth in the
absolutely. Yeah.
we know that real estate is the best way to do that.
Yeah.
So I
Um,
appreciate you.
yeah.
I
Yeah.
appreciate your time. as we
Of
said
course.
a few minutes ago, we could stay on this subject for a very long time, but
Yeah,
just
this needs to be
here's
part one. Let's do part two or three, or let's keep it going. So,
right.
yeah.
So in the comments below, I'll have your contact information. I'll also have mine, of course. If any of our listeners want to reach out to us to go in depth a little bit more, or maybe just send us an email or shoot us a text. Either way,
Yep.
just any questions, even if you're not ready to buy for like 5 years or a year from
Right.
now, you can never start planning early enough and
For sure.
making sure it's really a team of people that are going to help you get to the finish line and help you into home ownership. Don't feel like you guys ever have to do it alone. You want to really surround yourself with really smart, educated people in the real estate business. So, thank you. I appreciate you. Until next time.
See you, Christy.
Bye.